Limitless is a 2011 blockbuster based on a book with the same name, and it's about a failed writer called Eddie Morra. At the start, Eddie was a loser, he can't finish his book, then he takes a drug called TNZ and everything changes.
I wasn't high, wasn't wired, just clear. I knew what I needed to do and how to do it.
He writes a book in a few days, and he's ready to move on to other things.
Suddenly, I knew exactly what I needed to do. It wasn't writing.
So, what will he do with this new boundless ability? Will he create more literary masterpieces? Will he solve scientific enigmas? No, he will focus on making money. Good boy. And he's good at it. But could we invest in a real life equivalent of Eddie Morra? That's the question we're going to try to answer. And straight away, we see that historical returns are impressive.
Returns last $800, I made $2,000 in a day. Next day, $7,500.
But we need proper due diligence. We need to understand his investment style, the origin of these returns, if they're sustainable. So we get some clues about the investment style through the movie.
I found certain algorithms in the perception of the stock.
Pattern recognition.
So algorithmic or quantitative trading has been pioneered by Renaissance Technologies, launched by mathematician Jim Simons. It's quantitative trading, getting a lot of information from the market and trading based on those signals. It's something that people do with very powerful computers, but here we'll just take it as a metaphor, and Eddie can do anything that a computer can do.
My new friend, Kevin Doyle, showed me how you could leverage 2.5 times your cash at a day trading firm.
He talks about day trading firm, and it sounds like a very small shop, but let's say leverage is something that they provide. If we transpose it to a hedge fund world and consider that his algorithmic brain, instead of day trading, it could be very fast, high-frequency trading based on quantitative approach.
Massive research. I knew every helix of every scrap of DNA in every company I bought. Paper stacked like the Himalayas in my office.
What he mentions here is fundamental research. This makes him sound a little bit more like Peter Lynch, who famously knew the whole DNA of the company before investing and goes through deep research. There's another clue.
Share prices aren't really based on how a company works. It's about how mass psychology works.
Mass psychology, that brings us to behavioral finance, something initiated by Nobel-prized Robert Shiller. So the market doesn't just work efficiently, it works based on the behavior of all the market participants. And Shiller has also evolved his theory and talks a lot about narratives. And therefore, understanding the narratives, understanding the hype, can be a very powerful driver of the stock of the price. So that makes a lot of clever strategies. They don't always mix up together, although there could be a fund with like multiple strategies. A quantitative approach with high-frequency trading, fundamental research, and behavioral finance. All of that just for one man who's got a super powerful brain.
I quintupled my money 4 days in a row.
But at the same time, there's some big flow. If you can quintuple your investment, or let's just say you double your money every day, and you start with just $100, well, you'll be a millionaire after 15 days, and it will take you 25 days to become a billionaire. On day 37, you're a trillionaire. And maybe it's not days, it's weeks, but in less than a year, you'll become the richest man on the planet. If you have the ability to do that, you don't need to borrow, and you definitely don't want to borrow from a mafia guy.
Why do I give you $100,000?
Failing to see this situation makes me think, is his brain extremely powerful? Or was he just very lucky with his initial day trading and very confident and also telling a very good story? And in fact, he adjusts his explanation to what people want to hear, and that's a great way to attract more funds. He's not stupid. So did he not realize that he can become a billionaire very quickly by just doubling his money with his own day trading? Or is he clever enough to realize that he can sustain that performance? And therefore, the best way to get rich is to use that initial track record in order to attract more capital and generate fees. And if you have a lot of assets and generate a lot of fees, you don't care so much about if the assets perform or not. So this makes it a very interesting proposition in terms of should we invest in the equivalent of Eddie Morra?
I'm sure you have a portfolio, but if you don't, I'd be very interested in working with you.
Well, obviously, no, I don't want to invest in his fund. But could we invest at another level? If he's able to attract a lot of assets, where we want to potentially place our money is in the fund management company, not in the fund itself, because he's got a great potential for attracting a lot of investors and build a fortune through this. What could be the real life company or person that we could match this to? Well, I think ARG Fund Management is a great example. They had a fantastic track record for a few years when everything was up. So you could say they had a very high beta with heavy bets on technology. This has now crashed down, but they have amassed so much capital that the firm is much more profitable than it was in the early days when they were just starting out. So what you need in that case is to consistently deliver a good story. It's always about the future. If he builds a fund, if he raises enough assets and manages to deliver the story and people believe in it, there's a very sustainable business there. So our verdict is that we will invest in the fund management company, not in the fund. This is kind of a controversial finish, but let me know if you see things differently, what you think about it, and if there's any other movie or scene that we should analyze. Thank you.